Where do these negotiations stand? What is the EU specifically willing to accept, and on what terms?
Yeah, so now they're sort of dawning to this realization that basically this flat tariff, this 10% that the Trump administration has been talking about, is basically something that is non-negotiable, which I think for many people was something that was actually pretty clear quite early on in these conversations. Now it seems that the Europeans have accepted this and are saying, okay, we're going to accept some kind of imbalance in this kind of arrangement, but critically we need some exceptions. One of the exceptions they're trying to find is they're trying to bring that auto tariff down from that 20% level, either through quotas or exemptions to basically have the effective rate be lower. But also they need a clear idea of what the future looks like for the pharmaceutical sector, what it looks like for semiconductors and aircraft. Those are the three sort of key sectors for the Europeans, because basically what you're doing is entering into a negotiation with something without the final price of what you're dealing with. So what they want to do is have a full picture before they agree to anything, and that's how the conversation is now going to proceed with the Europeans. And of course this is about a week away, right? And we don't know how much the Trump administration wants to bring in other things like the digital tax. We saw what happened in Canada. France, UK, Spain, Austria, they all have digital taxes. Could that be something that comes in? So this is just basically something they don't want to have to negotiate several times in a row.
And the mood music has been more positive as we lead up to July the 9th, but by both sides. And maybe there's some kind of framework that they agree to before nailing down a full and more comprehensive trade arrangement. But give us the context, the size and scope in terms of what is at stake if indeed Trump goes for 50% tariffs, which he has threatened on those imports of EU goods into the U.S.
At stake is the biggest trading relationship in the world. I mean, we talk about it often. I mean, this is such a huge number that it maybe doesn't mean a whole lot to us, but it's $1 trillion worth of goods that go in each direction basically every year. What has been interesting is in the first 4 months of the year, the trade deficit that the United States runs with Europe has basically close to doubled. Basically, last year was $250 billion. This year, in the first 4 months, it was $115 billion. So it was almost half of basically the entire thing of last year for the only first 4 months of the year, because everybody has been shipping goods to try to get under the tariff barrier. Does that make it more difficult to have these negotiations? Because in the Trump administration's mind, this only sort of further gratifies the situation. In terms of what the impact of 50% tariffs could be, I mean, we talked to finance ministers in the lead up to all these negotiations. It's basically incalculable at this stage. But as you were pointing to, I think the most realistic outcome, if I were a betting man, is that they get a broad framework, they get a sort of consensus, sort of broad agreement, some happy noises, but the can gets kicked down the road a little further.